Hello and welcome to this week's episode for Conservative ETF Investor Stock Market Update for the week of May 13th, 2017. Here we are on our home page. As soon as this video is done, we will upload the video link right here so you can click on it right from our home page. And also, here are our current recommendations, which you can get from the home page, or you can get them from clicking right over here on current recommendations. Basically, we are still on our current posture for all ETFs is hold recommendations. We are on a hold recommendation across the board for all of our ETFs. You can see here what our total return percentage is across the board as well. And for each one of our ETFs, including dividends, that's what this column is over here. So that includes the return of the ETF as well as the dividend associated with the ETF since the transaction date, which you have right here. The portfolio as a whole, let me get you that. Okay, here is the return of our portfolio since our transaction dates. We have a total of 12.72%, not including dividends, and that's since inception. And now just for calendar year 2017, we have a total return of 5.61%. So those are our total returns, not including the dividends. If you wanted to look at the dividends, then you could go ahead and add in your dividends, which we total at 1.22% for the all of our dividends with our percentage allocations on our recommended percentages across the board. This is each one of the dividends for each ETF, you can see right here. And here's our beta of our whole portfolio, and you can see we have a total beta of this portfolio of 0.63%. Very conservative beta. Beta is basically a measure of volatility. A 1 beta equals the S&P 500. And then if it's above 1, it's got a higher volatility, and if it is below 1, then it has a lower general volatility. Okay, so that's our portfolio. And now let's jump right into our charts and see how each one of our ETFs is doing. Okay, so here we're going to start off with the weekly chart. Oh, let me get rid of that inspect mode. This is so we use stockcharts.com as our charting service that we like. So there it is right there, stockcharts.com. This is the S&P 500. The symbol is SPY. We nickname it spiders. So this is the spiders S&P 500 SPY, and this is on a weekly chart, and we go back for a duration of 5 years. That's the duration of our chart. Each one of these bars, candlestick charts, each bar represents 1 week. And then we have 2 moving averages in our chart. We have an exponential moving average of a 17-week and a 43-week. So the slower moving average is the 43, the faster moving average is the 17. So we're always looking to see if the blue is above the red, indicating that the momentum is to the upside. Now, not only is the blue above the red, but the ETF is trading above the red as well. These lines that I've drawn in here are trend channels to see, how the ETF has been trending, and you can see an upper wedge formation. We are trading within the trading range of an upper wedge formation, and we're pretty much smack dab in the middle. The S&P 500 has lost 0.3% for the week. And let's scroll down here and look at our momentum indicators. The bottom one here is the slow stochastics, and it is bottomed and turned positive. So that's a good sign. That's showing that's got some strength. It didn't even come down and touch the lower end of the trading channel here. It bounced before that, showing signs of strength. Also, it never came down and went below its 17-week EMA, showing signs of strength. And what has happened to our MACD? You can see over here in the thumbnail that the MACD has crossed below its signal line, bottomed, came back up, but doesn't seem to have enough momentum yet to get above that signal line. We are trading at a very high range. We have softened up since here to here. Let's see, we hit that peak right about here, and you can see basically since we've hit that peak on the MACD, we've gone and traveled sideways, which is a consolidation for the ETF. That if it stays in this consolidation pattern, that's a sign of strength rather than a breakdown and then moving down south. So of course, you know that we're already on hold recommendations across the board. So this is our chart for the S&P 500. Let's go over to the NASDAQ 100, which is technology. Same thing, a weekly chart. Let me get rid of that inspect mode. Same thing, a weekly chart, and the symbol is QQQ. We call this one the cubes. The NASDAQ 100 has gone up 0.77% for the week, showing you how strong it is. It is trading above its upper wedge trading pattern. It is broken above that, showing signs of strength. It is leading the S&P 500, which is a bullish sign for the stock market in general. What else is happening? Now, you'll see that your MACD came down, didn't even cross below the signal line, and has turned positive. But look at it, it's a very high, it's trading in a very high range. For the past 5 years, you've never seen it trade this high. So, I mean, it's pretty high. It's almost at 5. It's 4.8. You can see it right there, the actual numerical number. So we're expecting either some sideways consolidation or possibly drop back down into this trading channel. But it is extremely strong. Here you can see that the slow stochastic is trading above its signal line, although it has lost momentum, and on its current trajectory looks like it's going to come back and intersect that signal line in the near future. But this is one strong ETF. Definitely technology is a strong ETF, and it is good that we have a portion of our money in this ETF, because since our buy recommendation, it has gone up 40%, and with dividends 41.44%. And if you see all of our ETFs here, that is the strongest one by far. The closest one outside of that, let's see, what is it? 17%. It's a small cap Russell's 2000. That's our next chart pattern. Let's go ahead and look at the Russell 2000, which is IWM is the symbol. Here we are on a 5-year chart. We've gone down 1.06% for the week. Here we have we're in an upper trading channel. The ETF is trading in this upper trend channel. It has just about come down and touched, or very close to the bottom edge of this, and let's see what's happening here. On your slow stochastic, you've got a bounce, it's come up, but now it's reached a top, and so it could just have a little bit of wiggle in it, and that could continue on and then travel up, which, judging from this, we're expecting something like that. Still, it's a strong ETF. You can see that the 17 week is above the 43 weeks nice and strongly, and the ETF is trading above the 17 week, which is also a sign of bullishness. So again, hold recommendation for IWM. Let's move on to our next one down the line, which is VEU. This is the Vanguard All World excluding United States ETF. Symbol is VEU. It has gone up 0.12% for the week. Now, you'll see that since the last couple of weeks, this ETF has shown strong strength. It has broken above this upper trading wedge pattern and above this declining tops trend line, which was a resistance line. Once it gets above that, which once acts as resistance, will now act as support. So if you wanted to enter in here, you could use a stop loss of this trend line right here. If it comes below that, that would be a time to exit your position because it would have been a poor purchase decision timing wise, and then you could wait till it comes down and bottoms a little bit before you re-enter that position. On our momentum indicators, our slow stochastic is above its signal line and positive, and our MACD has come down, turned up, all above the signal line, all above zero, all bullish signs. This is a very strong ETF. You can tell just from the chart pattern that this is acting very strong right now. And that is for VEU. Let's move down to our next ETF in line, which is Treasuries, bonds. We do like it if you were to buy individual bonds, but we can't track individual bonds, so we track a bond fund. This is symbol TLT. It is 20-year Treasury bonds ETF, and bonds has gone up 0.08% for the week. Now, let's look at our chart pattern here. You got a lot of moving parts here. There is a trend line here, which was a declining tops trend line. We broke above that declining tops, but then there was another declining tops trend line here. We came up just about hit it before we backed off. Now, this, which once acts as resistance, now acts as support. You can see right here, you can see it real well in the thumbnail. This bar right here, which is our current week, came down, bottomed, and then went up, and it closed at the upper end of the week. That's bullish. That looks, from the chart pattern so far, it looks as if this declining tops is going to hold support, and it's going to come back up and retest this, or it's going to come up and challenge this declining tops trend line to see if it can break above it. We don't know if it will or won't. Slow stochastic's momentum is negative, and the MACD momentum is positive, although you can see that it has softened. So right now we're right in between these two trend lines. We're trying to see which direction TLT wants to take us in. If it does not hold this one, this particular trend line has got a lot of support to it. Now, it could be a triple bottom. It already tested that support line once, twice, and it could come down and test it again. All we can do is wait and see what this ETF is going to do. We're still on a hold recommendation for TLT. Let's move on to our next ETF, which is real estate. We track the Vanguard REIT, which stands for Real Estate Investment Trust. It has gone down. Real estate has not been doing well lately. You can see here that it has softened up significantly over the last few weeks. Again, we're on a weekly chart looking at 5 years our duration, and you're looking at a couple of trend lines here, and we're trading right in between them at the moment. We are actually right at this bottom trend line right now. You can see it right here in the thumbnail. We're right at the bottom of that. We are in this position. We're still holding, and what we're hoping for is a bounce off of this and come back up and at least challenge this, if not break above it, and get to this upper trend line. But we are waiting to see what it's going to do. The slow stochastic's momentum is turned negative, so it's coming down. It's below its signal line, as well as the MACD is below its signal line. But it's right here at zero territory, so it's got plenty of room to go in either direction. We just have to wait and see what it's going to do next week before we decide to do anything. Still on a hold recommendation for VNQ. Let's move on to our next one, By the way, VNQ pays a nice hefty dividend right at the moment. It's our highest dividend ETF. 4.49% annually is the current yield at the current trading price of $81.28 per share. So it's a great yield. Just buying and holding it and just letting it sit tight. The next ETF and our last ETF for this week is GLD. All right, so this is our gold ETF. GLD is the symbol. We're looking at a weekly chart, and this is again a 5-year duration candlestick chart pattern. All right, gold, you have a declining tops trend line. It's been going on for years. It came up there, came down, and it came up recently within the last few weeks, hit that, could not get above it, and came down. Then I had another smaller declining tops trend line, which possibly was going to act as support, broke right through that. But then we have another support line right here, as of today, has held. So right now we've held here right about, 116.83. We could hold here and it could come back up to try to punch through again, or it could break down, and then we have another support line here. And we're waiting to see which direction we're going to go in for GLD. Let's look at our momentum indicators. Momentum indicators for the slow stochastics is not good. It is traveling down. But who knows if that support line is going to hold or not. From the slow stochastics perspective, it looks like it's going to come down and at least stay there. And the MACD has topped and is traveling down, and it is at this rate is going to break below that signal line. It's right trading at 0. So this has plenty of room to go in either direction. I really don't know what direction this is going to go in. Looking further outside the box, if it gets above this line, that would be very bullish. If it gets below this line, that would be more bearish than it already is. And that's where we are right now. It's trading at 116.83. Our buy point was at 109.61 on December 30th. And that's where we stand with this ETF. All right, now let's move on to our volatility indicators. The first one that we want to look at is the VIX. The VIX is the volatility index for the S&P 500, and this volatility index for stocks is extremely bullish. We've got a couple moving averages in here. Our chart pattern has now changed. We're over to a daily chart. We have two EMAs, exponential moving averages. The faster moving average is the 50-day, and the red is the slower moving average, the 200-day. The 50 is traveling below the 200 and is traveling further away from it. The indicator is even traveling below that. So all of these signs are bullish for stocks. Low volatility in stocks means that stock prices generally go higher. Here's the chart of the S&P 500. When you have your ETF traveling below, the VIX indicator traveling below, and the blue is below the red, you can see that the stock or the ETF goes up. So it's a bullish sign for the S&P 500. Now, our next volatility indicator is the VXN. This particular volatility indicator specifically looks for the NASDAQ technology stocks NASDAQ 100. Very bullish for the NASDAQ 100. The blue is traveling below the red. The indicator is traveling below the blue. All bullish signs for the NASDAQ 100, which has already been a very good indicator. So pretty much that's it. That wraps up our video for Conservative ETF Investor. Here is going over to our home page, and here is our website address. We'll have a link for it at the bottom of our YouTube video. And thank you for watching this week's Stock Market Update. I'm Ken, signing off.